Welcome to the Investing Show. Today we're going to talk about cryptocurrencies. Are you thinking about investing in cryptocurrencies? Well, I cannot blame you. After all, in between 2020 and 2021, the price of the Bitcoin rose with more than 1000%. If you look for a chance to generate this huge profit, cryptocurrencies are of course a good possibility. But there are also many risks involved, so I would like to introduce crypto investing to you in this very easy, straightforward guide that teaches you everything you need to know to get started.
The stocks go up and down and they can change in a flash. If you're investing wisely, then you could make some cash. The market's known to be an unpredictable thing. You might explode your profits or lose everything.
So the first question you might want to be answered is, how can you actually invest in cryptocurrencies? Well, there are two methods for investing in cryptocurrencies. The first method is buying the cryptos on an exchange directly. In this case, you really hold onto the cryptocurrency, so you can really put your faith in a certain coin and wait for it to increase in value. There are many platforms available, but in the description I've put a link to my favorite platform. You're welcome, of course, to sign up to it if you want to. A second option is speculation. And if you speculate, you actually actively trade on the price developments of a cryptocurrency like the Bitcoin. You can do this by using a CFDs, or contract for difference. A CFD is a derivative you can use to both speculate on price increases and price decreases. Good broker I use myself for speculating on cryptos is Plus500. With Plus500 you can try the possibilities for free with an unlimited demo, which I would definitely recommend. Take a look in the description again to open your free demo account today. So of course this is not a very technical video, but before you really dive into the world of investing in cryptos, it is wise to at least briefly mention what a cryptocurrency is. A cryptocurrency is a type of digital currency that you can use to pay for stuff, just like you can use dollars, euros, pounds, Zimbabwe's dollars if you have the patience and the muscle to carry it on. Because a cryptocurrency is basically like any other online currency, except for one big difference. There are no banks or other financial institutions involved. The cryptocurrencies are a decentralized currency, which means that there is no central party that arranges a transaction between you and your cousin, your handyman, your wife, your ex, whoever. So how does this work? Well, there's a big network of computers, and all these computers have a copy of every transaction, which we call a blockchain. And every time a transaction is executed, all these computers validate whether this transaction is correct, and only if this is the case, it will be executed. And are cryptocurrencies something worthwhile following? Well, in my opinion, I can only say yes. Because cryptocurrencies can increase in value exponentially. I know someone who invested an amount of $100 in this random cryptocurrency that really increased and increased, and he became a millionaire literally in a few weeks' time. Of course, this is a rare story and I don't really believe that this will happen to me, but you never know, and it always doesn't hurt to dream a little bit, right? Why should you invest in cryptocurrencies like the Bitcoin or maybe a different altcoin? Well, one very good reason are the really high returns that you are able to generate with investments in cryptocurrencies. Take a look at the graph. Here you see how the price of the Bitcoin has developed over time. As you can see, if you had bought it at the right time, you would have had enormous result. A second reason why investing in cryptocurrencies might be interesting is because there is no third party involved. There's no bank, no government who can really control your transactions, which gives you a lot more freedom, and this might appeal more investors, which can of course drive up the price. Another benefit of investing in cryptocurrencies is that you really invest in the future. Cryptocurrencies are still very much a market that is developing. Cryptos are being embraced by more and more companies. Tesla, for example, allows users to buy a car now with their crypto. Still, not many companies accept bitcoins, and there is a lot of space for this to grow, which can of course drive the price up. A last point that might make it interesting to invest in cryptos is that it can diversify your investment portfolio. When you invest in multiple assets, let's say stocks, maybe some savings, some bonds, some real estate, then cryptos can be a nice addition that might kind of steady your results. Like suppose stocks don't do that well, then maybe cryptos will do better, and it kind of even stabilize your results, funny enough. I would be lying, of course, if I said there were only benefits to cryptocurrencies, because there are definitely also a lot of risks involved. One gigantic risk is the volatility. Owning bitcoins or other cryptocurrencies is a bit like going in that scary roller coaster in a theme park. Up, down, you know, like sometimes you want to puke, because that's how fast the price can go down. And when that happens to your money, you're like, damn. Another issue with cryptocurrencies is that there is no underlying value. When you buy a stock, you really buy an institution with employees, with products, with an ID. At least that's what you hope, of course. And that business can expand, so with your investment, you might in the future have a way bigger company in a sense. However, when you buy a Bitcoin or an Ethereum, you just buy that one coin. It's a bit like owning gold, but then without the stability of gold. Another point you should be mindful of is that there are many scammers. Because the price went up so much, many new investors are attracted to this possibility. And scammers and criminals, they think, nice, all these people without knowledge investing in something they don't know, let's promise them the world and take their money. So don't be one of these people. Lastly, it's important to note that because cryptocurrencies are fully decentral, there's no government or institution that can help you when you're in trouble. You're really on your own. It's like the Wild West. Crypto Wild West. So now that we have painted a clear picture of the benefits and of course the disadvantages of investing in cryptocurrencies, you might wonder what the options are. Well, of course, everyone by now knows the Bitcoin. The Bitcoin is really the dominant cryptocurrency with a market capitalization of over 60%. This means that of all the cryptocurrencies in the world, Bitcoin's value is still more than half of all of it. It would be like you're investing in stocks and an Apple is just like the only big stock in the world. So yeah, you could say Bitcoin has a very big role to play still, even though it's not necessarily the superior crypto coin. Therefore, you also see that many cryptocurrencies often move in line with the Bitcoin. So you can invest in maybe a dozen other cryptos, but when the Bitcoin is doing poorly, there's a good chance your other cryptos are also not performing well. The second biggest cryptocurrency that's out there is Ethereum. And this cryptocurrency became very popular because it added a tremendous amount of value. Ethereum made it possible for developers to develop decentralized applications on the blockchain. You could, for example, make smart contracts, which are a type of contracts that are executed when certain conditions are met. With investments in the Bitcoin or the Ethereum, you're probably not going to make those like tremendous returns, like invest $100 and make $1 million in a few weeks' time. With altcoins, there is that possibility. An altcoin is a cryptocurrency that is not a Bitcoin. That's it, basically. That sounds easy, but there are like thousands of altcoins and every day probably hundreds are added we don't know of. So that can make it very difficult to really select that altcoin that is very profitable. So investing in like all sorts of tricky altcoins is very risky, but if you have the guts, you might become a millionaire, who knows. When you're investing in cryptos, you see that most people speculate. And speculation is really like buy, sell, buy, sell, buy, sell, constantly buy, sell, depending on what happens. So how can you smartly apply the strategy of speculation? Well, for speculation, one thing you can do is really keep an eye out for news. Many people who trade in cryptocurrencies are not very experienced, so they tend to react quite strongly to both positive and negative news. You can also take a look at cryptocurrencies that are going to be listed on an exchange. When a crypto is listed on an exchange, people can more easily trade it. This can also give the value a boost. Many successful traders apply technical analysis. They look for certain horizontal levels where the price interacts. The price, for example, can often bounce back to a certain level and then bounce up again. Well, this can be a good moment to open your trading position. So besides speculation, you of course have the possibility to invest in cryptocurrencies for the long term. Crypto fanatics often call this hold. If you decide to hold, you should of course select a cryptocurrency that is worth holding. But the problem is that the price of a crypto can really go up, down, and when is the top reached? When is the low point reached? Because of course, any investment guy would say like, yeah, you should buy low and sell high. Well, it makes sense, but how do you know when it's high? How do you know when it's low? Well, a good strategy for people who really want to invest on the long term is dollar cost averaging. The idea behind dollar cost averaging is that you buy for the same amount of cryptocurrency, basically for the same amount of money every month. So let's say I will invest $100 in Bitcoin every month. So sometimes I buy Bitcoin for a low amount of money and sometimes I buy Bitcoin for a high amount of money. By applying this strategy, I can benefit from the average increase in that crypto. You can of course also decide to invest a little bit more after a crash, since a discount is of course always nice. If you go buy shoes for nothing, why not buy crypto for nothing, right? When you decide to invest for the long term in cryptocurrencies, it's wise to first review the project you think of investing in. Because you really have to see if that project has potential to grow even further in the future. So one thing you can look at is the way the project handles privacy. Because the cryptocurrency Bitcoin is not actually fully private, even though it has the reputation in being so. Because when you send money to another user by using Bitcoin, your address is actually still visible. So if people can connect your address to you as a person, they can actually in the blockchain quite easily see how many transactions you receive. So cryptocurrencies that offer a solution for this can be an attractive investment. A second reason why a cryptocurrency project might be interesting is because it offers a better functionality when it comes to scalability. The Bitcoin is very limited when it comes to its scale. You can only process about 7 transactions per second by using Bitcoin. So imagine if one day Bitcoin would be real money and you will be in the supermarket and you have to wait 15-20 minutes before your transaction is finally executed, because in India there's some sort of festival and many people are buying stuff at that time. Not very practical. So the Bitcoin right now is basically not really usable, because if you compare it to Visa, the credit card system, they can process 10,000 transactions per second. So any crypto project that offers a higher scalability, so basically you can conduct transactions cheaper and faster, might be a good investment. A third reason why an investment in a new cryptocurrency project might be interesting is because it offers more interoperability. It basically means that the project makes it possible for other projects on the blockchain to work together. For example, you could use perhaps the Bitcoin on Ethereum, or you could combine all sorts of networks together. And this is of course beneficial, because some people want to use network A, some people want to use network B. And by increasing the possibilities for connecting all these systems, the blockchain and the entire crypto community becomes stronger. So also an investment in a project that offers that possibility might be a good idea. Of course, some projects even combine multiple of these functionalities, which might make it even more attractive. Before you invest in a cryptocurrency, it is also wise to really wonder whether that project really needs tokens. Because not every project really has functionality for a token. In our currency system, of course, euros are very essential to exchange goods. And also a token in the crypto world needs to have some sort of functionality. In the next part of the video, we will discuss different functionalities that a token can have. So how do you rate an actual token? Well, you can look at the functionality of the token. One functionality of a token is of course its currency value or economic value. You can use a token to, for example, buy a product in a supermarket, buy stocks, basically buy anything that you want. That's of course a very useful functionality, because then the crypto can really be used as money in the real world. A second use of a token can be that it can provide you with rights within a network. This means that if you own more tokens, you're able to vote for certain directions of the project. And when you own more tokens, you have a higher voting right. It's actually a bit similar to owning stocks in a sense, because when you own more stocks, your vote also is stronger. The third use of a token is that it can help you to get access to a certain service. Imagine that some sort of company has a supercomputer that you might be able to use. Then you could use a cryptocurrency to pay for the usage of that computer. A token can also have a specific functionality within a network. You can then use the token for interacting with other people, for example. Or you can vote on certain messages in a network and basically show your appreciation by donating tokens. So a token can also have a very unique functionality. Lastly, tokens can be used to distribute profits. Imagine a certain project generates some sort of profit, then owning the tokens indicates that you have a right to a part of these profits. Just like owning shares basically. and you can see the money that you receive as a sort of dividend. As you can see, tokens can have all sorts of functionalities within the network. When one token has multiple functionalities, it might actually be an even better investment. However, if a token has 0 functionalities, then probably it's not wise to invest in it. In this case, the price is solemnly determined by people buying and selling it because they expect some sort of massive return, while actually it has no functionality in the real world. And personally, I prefer investing in things that have some sort of meaning, because that is something that in the long term will really generate value. Of course, you can always gamble, but gambling is not an investment strategy. When you see a token that really does not offer many new functionalities, then you might also be looking at a scam. Because the Bitcoin and other cryptocurrencies have increased so much in value, many criminals are attracted to it as well. They try to attract people from all over the world to invest in their fake projects and just take the money and run. You can recognize these sort of products by looking at their promises. If a cryptocurrency project promises guaranteed returns that are too good to be true, they probably are. In this case, you're probably looking at a pyramid scheme, where the deposits of new users are used to pay the returns of older users. The problem with a pyramid is that it will collapse at some point, and you might be the unlucky guy that loses all his money. Recognizing a scam is also possible by taking a look at the team behind the organization. If the team looks reliable, they have knowledge, then this is of course a good sign. If their team consists of a random garbage man and a hairdresser, then probably it's not the best representation for a blockchain project. Even if the team looks very good, it's still smart to really research the team, because criminals are pretty smart nowadays, so they can also Google photos of people and just put them there even though they're not even related to the project. So if you see a famous actor or Obama connected to a crypto project, it's probably not wise to invest in it. Lastly, we can also take a look at the white paper, because every serious cryptocurrency has a white paper that explains the usage of the project. It basically describes what you can do with the cryptocurrency, what the idea behind the project is, and what the future developments are. If you are scrolling through a white paper and you see a cabarets or some bullshit, then yeah, you should probably not buy the crypto, because if they cannot even write a solid white paper and they cannot explain what their crypto is bound to do, then it's very unlikely that the project behind it will ever become a success. So suppose you do find that cryptocurrency, if you want to buy and you think yes, this is really worth investing in, then when do you actually buy? Timing buying and selling cryptocurrencies is highly challenging. Of course, people on the stock exchange will tell you, buy low, sell high, and that is indeed what you should do. But how do you know when there is a high price and when do you know when there is a low price? It's incredibly difficult to predict what the markets will do, and crypto, because of its high volatility, will actually make it even harder. Therefore, it really helps to get a feeling of the market by practicing and practicing. You can do this with a free demo at many brokers, and in the description you find a link of where to open a crypto demo yourself. Don't put in your money right away. Practice, and only when you're confident enough, you can start timing the market. So when you do invest in a crypto, how do you actually store the cryptocurrency? Because just like with stocks or a house or bonds, you don't want to lose your investment. And cryptos are even less intangible. It's really like something digital. So how do you hold it? You can't just grab it and then put it on your bed, for example. Well, most people actually end up storing their cryptos on the exchange. This has the benefit that it is easy to quickly sell your cryptos, and also you can easily wire it to another user. However, there's also a big risk connected to storing your cryptos on an exchange. There is a possibility that a hacker will gain access to the exchange and steal all the cryptos that are connected to it. This happened in the past and it will happen again. Therefore, if you invest with large sums of money, it might be smart to put these cryptocurrencies on a cold wallet. A cold wallet is basically a hardware device that you can use to store the crypto codes. It is of course important that you keep your keys somewhere safe. There are many stories of people who lost their keys and now hold a useless device with $100 million worth of Bitcoin. Don't be that person. Remember your password and store it somewhere safe. Because if you don't, someone might literally steal it in a physical sense. Maybe your cousin is like, what's that? Maybe I can use it to record a movie. So after all these talks about investing in cryptocurrencies, you might wonder, how much can I actually make? Well, just to illustrate what is possible, if you would have bought bitcoins a year ago at this time, so in 2020, and you would have held it for a year, you could have made a 1000% profit, as you can see in the picture here. Do you think that's a high return? Well, then take a look at this picture. SafeMoon, a pretty unknown altcoin, probably without any merit in the real world, increased extremely in value. So with an investment of only $100, you could have been a millionaire. However, remember, for every crypto millionaire, there are thousands and thousands of people who lose money every day. Do not think of investing in cryptocurrency as a get-rich-quick scheme. You might get lucky that way, but it's not a solid strategy. So after watching all of this, you might wonder, are cryptocurrencies really a good investment? There are many benefits to cryptocurrencies. You can become a millionaire literally overnight, but at the same time there are scammers and people losing hundreds or thousands of dollars of money every day. Well, in my opinion, cryptos can definitely be a good investment. However, they are only a good investment for those who are willing to risk their money. There might be a chance that you lose the full amount of your investment, so you really have to be comfortable with that idea. If that is the case, it can be interesting to invest a small percentage of your portfolio in crypto. For me personally, that means investing about 1 to 2% of my assets into cryptos. Did you enjoy this video? Press the thumbs up. Do you want to read more about cryptos? Look at the description. And if you want to see more videos to help you gain better results with investing, press the subscribe and see you next time.
We hope you found this little video very nice. It should not be taken as investment advice. Remember that investing always carries some risks. Don't invest with money that if lost would be missed. Video might contain affiliate links.